Good afternoon, gentlemen and a couple of ladies that I can see. This is the last session for the day, I'm told, so we'll try and not bore you guys too much. Before we start, I am the moderator and really grateful that, my peers with so much more experience than I do, probably for 10 years. I was a banker, I've been a CF only for 10 years, have joined me on the dais here. So we'll start as Varsha was mentioning, the topic of discussion is savings from costs versus growth investments. Right, so I would like to just talk a little bit about the last 5 years that we have seen as a world, right? So 2019 was a relatively stable year that we saw. And as this relatively stable year was ending, COVID came in. And in 2020, it was not just businesses, but it was the entire humankind that was fighting for survival. And in that period of 2020, it just became apparent that cost cutting and savings to be able to just sustain the businesses was the most important agenda for everybody and not just for CFOs. And then as 2020 ended and we got into 21, vaccines came in, right? And as vaccines came in, the world became a little more able to deal with the uncertainty or the pandemic that was there. What we saw during 2020 and 21 was some of the businesses got completely wiped out. Horeca, airlines really bore the brunt of it, right? But then there were businesses that really gained. Logistics, for example, pharmaceuticals, and dare I say chemicals, right? We all had very good years. And then came 2022 when we got into the new normal of where we are seeing very aggressive geopolitical interactions happening. And when Russia invaded Ukraine, Europe lost its source of energy. And suddenly costs became very, very important for Europeans to start looking at because it was a high inflation, high interest rate economy where now suddenly energy is important to every business, right? Percy's businesses into steel manufacturing requires energy, lifestyle requires energy, chemicals, extremely energy intensive, packaging again, extremely energy intensive, right? And I'm sure we can talk about any industry. So Europe was looking at cost cutting, they're still in the doldrums. And now we are sitting in India in 2024 where we are saying, okay, the world is seeing green shoots of inflation stopping to increase, interest rates are not going up. And in India, we are sitting pretty in an economy which is growing, lo and behold, growing when the rest of the world is either facing degrowth or stability, degrowth or just stagnancy. So the question is, as CFOs, what do we look at? Have we pivoted from cost control to growth investments? I was just discussing with one of the bankers outside right now and I said Lakshmi Organics is undertaking the largest capex ever. And the shock reaction was, in this market, when it's so difficult for chemicals? So the question really is, are cost savings and growth investments mutually exclusive? Or are they the same coin, but two sides of the same coin, right? So I would like Percy, if you could kindly start the discussion and give your perspective on this, specifically from a manufacturing lens.
Sure. Thanks, Tanushree. So we'll try and keep the session interesting for you guys because I guess this is the post-lunch sessions. But coming from a manufacturing perspective, cost savings has been a traditional area for CFOs. And let's be very honest, there have been sometimes very unpleasant tasks that have been given to CFOs as well when it comes to controlling manpower costs as well. This happened more so at the time of COVID, which I think all of us experience that. But cost savings and generally these are reductions are the measures that really call for in very tough times. So again, best example is a recession or a COVID scenario. In a scenario like today, where India is doing phenomenally well, Indian economy is seen as one of the best performing economies in the region and in the world. And also the prospects for the next 2 decades is amazing for India, where growth and investments are really going to be the game changer. In this scenario, what should be the CFO's role? Tanushri asked a question, are these 2 things mutually exclusive? Cost savings and growth investments? There is obviously connection between the 2. So if you have to be a most efficient producer of any product, any service, then, mic has gone off. Okay. So cost savings is something which is inevitable. You have to be one of the most efficient producers if you have to survive in any particular industry or a segment. But what beyond that? So by cutting the cost, maybe you can improve your margins for some time or the other. But what about the investments? Whether investments that need to go into R&D, whether investments that need to go into growth, in capacity expansions, in diversifications. So, and scaling up of the activities as well. So that's another aspect which I would like to stress upon, coming more from the manufacturing side. Unless you are able to scale up your operations so that you are one of the top 3 players in terms of capacities, in terms of production, in terms of sales, in a particular segment or in a product category. Unless you are going to be one of the top 3 players, somewhere or the other, you will get beaten when it comes to cost control. There'll be other guys who will be able to scale it up, and along with scale comes certain cost economies as well. So a key aspect which I would like to say is the CFO's role is also as to how do you scale up your operations to a level where you are in the top 3 and where you can get the economies of scale, which ultimately leads to cost savings, of course, becoming the most efficient producer of any product or any service. So maybe this is the thought that at this point I would like to leave with. Over to you, Tanush.
Thanks, Percy. I think what Percy said is so relevant, right? Even at Lakshmi Organics, where one part of our business is essentials, the right to win that we have is the cost curve and being in the top quartile of the cost. And you can only be in the top quartile of the cost if you really have the economies of scale, right? So very, very valid point. Moving from manufacturing to retail, Srinivasan, would be very interested to know what your thoughts are, because there is, in the case of retail, right, and in your kind of business, you have to spend to acquire a customer. That's the dichotomy, right? And then what is a good customer and a bad customer? So could you talk a little bit about, from the retail lens, on cost savings and growth investments and the correlation?
Sure. Good afternoon, everyone. Thanks for this opportunity. Retail industry also was impacted very badly during COVID times. So we had to adopt some drastic measures which we would not have adopted in the normal course, and so that we get a base to start from once the pandemic was through. So from that point of view, my own perspective is that cost savings or cost optimization, I wouldn't say savings, more like optimization, is the base from which you can make your growth investments, right? So because funds are limited, for any shareholder to put in money, he'll always look for return on investment. He would like to diversify his investments, and therefore funds being limited, you have to make optimum use of it. And there is always a dichotomy between spending on OPEX versus CAPEX. And typically all of these growth investments would fall in the category of, operating CAPEX, in the sense that much of it will get written off because you won't have a tangible benefits which your accounting standards allow you to capitalize. And but these are very essential from a futuristic point of view. So what we did at Raymond during pandemic was we created a base of 400 crores of sustainable cost savings, inflation adjusted, of course, which helped us come out of that, that low of the pandemic cycle, and allowed us to start investing in the business in areas which are not necessarily that areas that we have used to in the past. For example, the base of retail industry is customers. As you say, we have to acquire customers, and there is a keen competition. Many foreign brands have come into India, etc. So you have to retain your customer. So one of the tools that we use is our CRM tool, where the moment you have a customer or a potential customer, you get his data, you see his buying patterns, you try and kind of get insights on that from that tool. So when the question of investment in that tool came up, because there are no tangible benefits that the business can guarantee out of it, there is always a skepticism. Why would you spend so much when you don't know what you will get out of it? Is it not better than to do an advertising or a brand promotion kind of a thing? Even there, I'm not sure whether you can measure the return on investment. But the sense that that we got was that if you have to be future ready in your business, and customer data is key to future growth and exponential growth, it's important that we invest in the right sectors. And this cost saving then proved to be a base which helped us invest in some of these technologies that's helping us today to come back to the level beyond pre-pandemic level, and having a good growth in year compared to our competitors.
Thank you, Srinivasan. Continuing the thought on cost of customer acquisition, I was working for a startup during COVID. And for a Marwadi Baniya like me, it was actually the first time where I realized that spend was more important than savings. And this cost optimization was not really a requirement of the business. Very shocking for me. Deepak, you've worked for a startup as well, right? So very, very different context on traditional businesses versus startups, where it's just growth investment that matters. Cost optimization is not the need of the hour. But before I ask you to comment on that, Deepak, I also know that you've worked at Pepsi and GE, right? So I'm going to add another question there. In a similar trajectory to startups, a lot of MNCs look at India from the perspective of growth, right? And there, they may be willing to say that costs are not important for them because globally they have the money power. I don't know the answer to that. So if you could talk about your experiences in the startup at Oyo and in the MNCs, and then tell us how the different businesses looked at these two aspects.
Thanks, Tanu, for asking, and very interesting question. Actually, you're right. Both Pepsi and Oyo have kind of behaved in a similar manner when growth became very, very important. So Pepsi, in a duopoly kind of scenario, market share became very important, not only for India team, but also for the global management, right? And similarly, in Oyo, with the VC money coming in, they were looking at very, very quick growth. And what I've realized is that it always catches up. There are times when you chase growth, and it's a cycle. And then that cycle catches up, and then there is a pressure on cost and profitability. And it is, and after COVID, actually, a lot of sanity has come in. Not only, and this time at least the cycle seems longer of this sanity, where the investors are definitely looking at more sustainable businesses, more profitable businesses, and growth is not the only metric which is kind of being asked. People are also asking about how profitable you are, what kind of cash are you generating. So it is so important now in the hindsight to keep this in mind that this shall too pass, right? So it is so important to think about profitability when you are chasing growth. And what I've realized is the spends have kind of two matter, or they can be categorized as in two categories. One is growth spends, and then there is growth investments. Growth investments are the ones which are really sustainable way of acquiring customers, creating customer base, making and growing business in a manner that will last for a long term. Growth spends, on the other hand, are something which will definitely show growth, but it's not sustainable. And I give you an example. When in a FMCG world, let's say I'm taking an example from PepsiCo, where when you launch an innovation and it's a premium innovation, but you want a lot of customers to try it, so you go for an introductory pricing, right? That trial generation, we have seen that if it's very, very important, right? And you get a repeat rate, and hence you build that brand for the long term. It's important in a country like India where premium innovations, you really need to nudge your consumers to try the product. That is a growth investment. And then there are examples where I know our 250 ml Pepsi bottle was introduced at rupees 15. We called it a pocket pack. Actually, it was a hole in the pocket pack. Right? It did nothing to the P&L. All we got was the top line, and then we were losing money left, right, and center.
But it democratized the product availability and accessibility, right?
Yeah, that is true.
The sachet thing in FMCG also is that.
But sachets are more profitable than than this thing. But this here, the MC itself was very, very challenged, right? So it was not sustainable. But what happens is the moment kind of price goes back up, the customer moves to the next brand because the customer is kind of value seeking. So I realized that keeping that lens, what is a growth investment and what is a growth spend, that is very important. And the same thing has happened in OYO. I'm just kind of, when we were expanding, we kind of went into the markets which we knew that are going to take probably decades to become profitable, right? And still we went and expanded like crazy in those markets. Those kind of things don't remain sustainable. But at the same time, there are other areas where we have kind of made growth investments and that were good for the business. As CFOs, it's so important to keep that lens and keeping the management honest, right? And asking those right questions in the discussions, even when they are not generally not the popular ones. It's important to ask those questions. Are we doing the right thing? Is this for the long term? And I think, I'm sure we'll keep learning.
If I can add a couple of points as an afterthought. For CFOs, the best advice I got on cost cutting or cost optimization is from Adi Godrej in my earlier stint with the Godrej Group. So he says the best time to do cost optimization is when you're doing extremely well. And typically that is the time when you start, kind of ignoring all these small excesses, and that becomes a habit. So that's one piece I think when we are talking on the topic, I think it's important for us to understand that that's the time when you have to keep, as CFOs, tight control on the spends and seeing whether there is a use case for any spend. And similarly, all these new technologies that come, so they promise a lot of things, but you need to be sure that they are getting used and you're not getting shortchanged in just, in articulation of how or marketing of the particular application. The second thought is that as CFOs, we have to be primarily business partners, not as functional expert, but as business partners. So what we did in Godrej as well as now in Raymond is that we have a project called Project PI. That PI stands for profitability improvement. Now you need to keep getting this base for your growth investments because you don't want to ask your shareholder for money because that's very expensive. The cost of capital is extremely high. And therefore, what you need to do is to see how you do not impact the quality and are able to save costs through small initiatives, right? So that rigor and routine continuously has helped us in GCPL, Godrej Consumer Products. We were able to move the EBITDA from around 16% to about 24%, largely on account of this kind of a cost-saving initiative that used to run year after year. So we had 8 years of continuous project by implementation. And we were able to chisel away costs without impacting the quality. The same thing we are doing in Raymond today. And that has also served us quite well in terms of ensuring that people are on their toes in terms of spends, as well as look for savings, reduction of wastage, sustainable investments, etc. I thought I should add that.
No, thank you. The last point that you made was extremely interesting personally for me. It reminded me of one anecdote which I want to share. But before I share that, I'll just sum up what we've heard, right? That clearly it's not cost versus investment. It's about cost optimizing to be able to invest in growth. And every business will have a different prioritization, but we've got to see, and we've got to be the custodians as finance professionals of saying that we have a today to be able to deliver a tomorrow, right? I think that's what I summed up. But on how do you optimize these costs to generate this growth money, I want to share, I think I'd forgotten this, and thank you so much for bringing this memory back to me. So I was a banker for the longest time in my career, and in 2013 I decided that advice bahut de li, ab karke dekho. So I moved to industry. I was with NRB Bearings, and the first year that we joined, automotive was going through a tough time. The company itself was highly leveraged. We needed to optimize costs. We needed to increase profitability. So we had 6 factories. I went to 4 of the largest factories, and I spoke to people on the shop floor, along with the head of manufacturing and operations. You know, what was absolutely striking was the examples that they came up with, like your Project Pi. But I'll tell you the smallest example that they delivered within 6 months. So between these 4 factories, we used to have one plant that was a feeder plant. It used to manufacture products that used to go into all 3 plants. And we used to rent check bins to do that transfer. And suddenly one person in one of the largest plants said, कितना खर्चा करते हैं इसके ऊपर? हम जो child parts बाहर से खरीदते हैं, why don't we use those plastic corrugated boxes? Send it to that plant and let them use that to send the material. Material will not be impacted, quality will not deteriorate, we have a milk run, extra logistic costs will not come through. I categorically remember this was November 2013, and for the March 14 results, we already had savings from this that were coming out. So when we talk about cost optimization and growth investments, I think the last point I'd like to leave on the table is that while we are the custodians and we have the top view, right? I think what we really need to understand is that the simplest tricks and ideas are with people who are on the shop floor at, doing, or in the stores, right? We need to start crowdsourcing these ideas from them so that we can then have this cost optimization for growth investment. But having said that, right, and having concluded that they're probably both equally important, I think another aspect of investments that come in, and I'm sure everybody sitting in this room has faced this at some point in time, when investments are not directly ROI, or they don't show visually the ROI, or the ROI is not tangible, it becomes so much more difficult, right, to get those growth spends or investments through the boards. And 2 large areas around this are ESG, we just heard in the previous panel, and cybersecurity. a lot of the times when you're, we're all going through the budgeting exercise right now as we were discussing, and lots of debates happen on this, right? So again, Percy, may I request you to share your views on the G of the ESG, right? What is the importance for companies to be able to invest in governance, and how does that cost of compliance impact the interaction with the various stakeholders, and especially for a listed company?
So I think on the lighter side, I have my company secretary, and in each of his email, when he sends that, he has got you might call it as the last line, which is like below his signature. So he says that if you think the cost of compliance is high, then think about the cost of non-compliance. So today's world has become so governance focused and focused on compliances. You have regulators, and especially for listed companies. So BSE, NSE, SEBI, all these agencies, now they are deploying various types of artificial intelligence tools as well. So let's say you make a disclosure or a press release. Let's say you got some large order from a customer. You get a query from the exchange that, can you please tell us when did you come to know of this type of a thing, and whether you have done the disclosure within the timelines of 12 hours or 24 hours, whichever is prescribed. So governance has become extremely crucial, and there are various software tools also in which you need to invest in. So for example, let's say I'll just give the example, so please don't think those are the best tools, but for compliance purposes, we use a tool by the name Legatrix. Now this allows you to list down all the different compliances in a manufacturing organization. You have manufacturing plants, offices, shops and establishments, and there are hundreds, if not thousands of compliances under different laws. You have labor laws, you have factories laws, you have storage of explosives, you have different types of laws, regulations. How do you manage these laws and compliances? So you need some software tools where you need to invest in. Then also, for example, PIT, the prevention of insider trading. There also you need to have certain software tools, without which it's impossible to ensure that you are having governance and you are having compliance. Further things are like your board of directors, composition of the board, how many independent directors do you have, and what type of skill sets do they bring to the table. All these are going to ensure more and more of governance. So governance is now no longer a decoration for a company. Okay, governance is now becoming a prerequisite. Investors and all other stakeholders, if a company does not have governance, high governance standards, then many investors tend to shy away. No matter you might be having growth, you might be having profitability, but at the end of the day, and increasingly now than what it was 5 years back, investors and all stakeholders ask questions on governance, and they expect certain standards of governance from listed companies at least. So that's my take on governance. And yes, investments in governance is something which gives very handsome returns. You cannot really put an ROCE or an IRR to it, but over a period of time, when your valuation multiples go up, let's say your valuation multiple goes from 10 times EBITDA multiple to it goes to even 15 times. That itself is a huge return on your investment. So I think that's the take on governance.
Thank you, Percy. I think very, very well said, right? That the multiple that increases because of investors coming in, and a marquee investor can re-rate the stock, right? That in itself is the end that justifies all the investments that we do. The two alphabets of ESG, E and S, Deepak, right? You come from the packaging industry. My introduction to EPL at one point in time was when I was told all the toothpaste tubes are manufactured by EPL. This was many years ago, and if I was just to take that thought forward, E and S are probably far more critical to your business than the three of us sitting here, right? So how do you look at investment in E and S and optimizing costs at the same time?
Yeah. So you're right. Every EPL or SL Propack, as it was kind of known earlier, is the world's largest laminated tube manufacturer. Right. So every third toothpaste tube in the world is made by EPL. Right. And then we have significant footprint in pharma and beauty and cosmetics and other categories as well. So environment and sustainability is core to the business. We don't really look at it as a spend, or many a times even as investments. We look at it as something which is cost of doing business. It is something which is essential for staying in the business, right? And it is becoming more and more important. Why? Because our customers are asking for a lot of sustainable solutions. So Colgate, which is, let's say, one of our top global customers, has made a commitment that by 2025, all their packaging will become recyclable, right? Unilever has made exactly the same commitment, right? P&G has said 2030, but I'm sure if others are kind of moving to recyclable packaging faster, they would also move faster. Now, when you move to recyclable packaging for something like laminated tubes, it has a cost attached to it. Why? Because this laminate, which is now fully made of plastic, which can be recycled, it's much more difficult to run on your machineries. So the capacity gets derated by as much as 40%. So the moment you manufacture a recyclable tube, suddenly you realize that your capacity is kind of down by 40%, right? And then your paybacks and ROCE and everything becomes very difficult. In the last 3 years, and when some of these targets were not as stringent, boards have kind of brought them forward. EPL has invested more than $20 million, right, to upgrade its machineries in the capex cycle. So every year we would kind of put something else aside and say these investments are more critical. And we have invested more than $20 million to make our machineries recyclable packaging compatible so that they don't get derated, right? And those are the kind of things that we have done. Similarly, it's not only the product sustainability, it's also the people and process sustainability. So we subscribe to something called EcoVadis. EcoVadis is a global organization which rates companies basis their processes on where are they on their sustainability journey. EPL is EcoVadis Gold. It means that we are in the top 3% of the world's packaging manufacturers in terms of sustainable processes, people, as well as product portfolio. It has, again, huge cost attached to it because you are doing multiple things. What are your energy sources? What are your people processes? What are your wage processes? Are you paying? There is something called, it's not minimum wage. Now there is a concept called living wage. Are you living standard wage? Are you giving something that a family can survive the right way through the wages that you are paying, right? And that's a new concept. So you need to kind of be paying that kind of wages, right? So, and now we are gunning for EcoVadis Platinum, which has even more stringent standards. So how does it all come together? There is a cost attached to it, but then we see it as a competitive advantage. Today, when our customers are asking for recyclable tubes, I think we are head and shoulders above everyone else. We are well ahead of everyone else in having a capability to kind of provide those kind of solutions. When we have EcoVadis, we believe that the global customers pay a premium to be with a vendor or a supplier who is not only product sustainable, but also people and processes sustainable. And that's how I think this entire thing going to work. The entire ecosystem, I think, is going to, it's already becoming a lot more environment sensitive. And all of these investments are cost of doing the business the right way. And I think that's how we see it in the P&L.
Deepak, I think we join you. We also value the EcoVadis rating equally. I think for us, again, it's a benchmark that we look at. And I think the only difference I'd say is from a chemical industry point of view, everybody wants green today, but nobody is willing to pay a premium for green. Our customers are not willing to make that payment. Having said that, coming back to the place where we started from, right, Percy, when you said that, we have to have economies of scale and we have to have certain sizes so that the costs are optimal. I think where we are coming to is if we can have that and if we can have sustainability together, we will then have the first right of refusal with customers. So we may not get a premium for the investment, but we will get that business. And I think that's the lens that we look at life from. Moving on from ESG, coming to cybersecurity investments, I'm not sure how many people sitting in the room have ever dealt with a cyber incident. But I live by a statement where I say there are only two kinds of companies in the world. One that knows that they've been hacked, and the second who's been hacked but doesn't know that they've been hacked. And many, many years ago, in one of my earlier roles, I was working with a company where one of our subsidiaries actually had a ransomware attack. Right? Now, in that situation, what was super interesting for us was that we had gone through buying a cybersecurity insurance policy. And because we'd bought that policy, we'd set a protocol in place and we'd got all the BCPs, et cetera, et cetera, et cetera. So when the attack happened, it started a machinery whereby, people knew what to do. We didn't have too much of a spend. It was a small company, so the P&L was not impacted. We had backups, we could get backup, etc., right? But that's a larger event. Today we also deal with phishing and whaling attacks, which are fairly common, right? Cybersecurity has just become very important. But Srinivasan, as we were discussing earlier, right, from your industry's perspective, even if all of this is not there, unfortunately, you deal with consumer data and then you have to follow the law of the land, and that's a cost, right? So again, how do you guys look at investing in the security, cybersecurity, and how does that impact business and growth?
Yeah, so you're right. So it's not an option for us because the moment you enter a store, the first thing the guy asks you before billing is your mobile number, then your email ID, and then address is optional, but of course, date of birth, and they'll say anniversary. So a lot of this customer intimate personal data is being collected, and it's important for us to make sure that this data is secure. So ours is a legacy company. It's a 98-year-old organization. So it's not easy to change the existing manual systems into systems that are robust and they are secure. So there was a big debate in terms of how we should move on. So our point of sale system is what it kept POS as we call it. So we have moved recently to Dynamics 365, that is Microsoft product, and that platform is to my mind, and as I understand from our IT guys, is very secure. Microsoft is taking care of the security. So where you are not really sure of how you will manage all these thousands of outlets, the data getting captured there. But the data is extremely important to you because your customer is your lifeblood, right? And you really fight for retaining and getting a new customer, like we said. So we have kind of invested to make sure that the data that we have is secure. And the other thing, from a board perspective, in the last 3-4 years with the phishing attacks and the kind of, the information and the publicity that happens with any of these ransomware attacks, etc., the the awareness about these things and the kind of impact they will have on your business, because your business today depends on all of these IT, your servers and your data that is there, not with you physically, but somewhere digitally, right? And then you can't bill anyone if your servers are hacked. So it's kind of business continuity that gets impacted. And therefore, when such investments are proposed, they are just scrutinized by the board largely for the necessity and the diligence that has gone into what is necessary or essential as compared to something that you do just for, because someone says this is the in thing in today, right? So that's the only check and balance that we have in terms of spends, but otherwise, the board is fully aligned in terms of, investing as we need to protect our data and our servers. And the most important point is creating awareness amongst your stakeholders, particularly employees. A lot of these things happen from some remote place with some guy who just opens an email and then, finds it interesting and clicks on the exe file, and that's where things start. So we have all the security protocols, apart from creating awareness, like you have your firewalls, we have VPAT testing, all kinds of, processes and, instruments are in place to make sure that we take good care of cybersecurity. Fortunately for us, I don't know whether, as you say, we were not aware whether we have been hacked or not. Till now, I haven't heard an incident in my company, except it happened once. That was in one remote where there was but it was not in our business. It was in one of our sister concerns that it happened, and that further added to the board's alertness to it. See, here you need blessings from the top for ensuring. Here, CFO has a limited role to play in terms of recommending it. The board has to realize that the business is at stake and your legacy at stake, and therefore you need to invest.
Yeah, I think I have learned from that one incident that I lived through, right? That, and as you said, we are not experts in security. That's not the core competency for any of the businesses that we are a part of. And so, and again, this is just sharing something, right? Not advertising for anybody, but one thing that I found very useful is being with the Security Operations Center. So having a SOC monitor the operations or the traffic that goes through, right, ensures that the whitelisting and the blacklisting of IP addresses is done immediately. And some of these guys are startups. They don't actually cost that much. So they're also very, very cost efficient. But, we've spoken about manufacturing capacities, experience in retail, customer acquisition costs, etc. We still haven't touched upon the most important element, in my view, of what makes businesses tick, and that's our people and our culture, right? And very often what happens is when it comes about investing in people, culture, that's where, views, opinions can be extreme on both sides. So as a closing thought for this discussion, can I request each of the panelists to really talk about what they believe in investment for people, not just from a compensation point of view and not just from giving them a living standard wage, but also in their learning and development, and ensuring that we are able to retain talent. And the second point is also investing in diversity, and I'll disclaimer, diversity doesn't mean just gender. So also investment in diversity. Anybody can start.
So on the people side, at least the approach that I have taken as CFO is that I realize that it's much better to pay well a fewer number of employees than to kind of bloat your organization and then struggle with the pays. And it's not only the number of headcount. I've realized that the people cost has huge number of layers, right? It has huge number, whether it's the office cost, staff welfare cost, travel cost, and then everyone trying to justify kind of their their presence, and hence the number of projects that that are taken, and then the complexity that gets added in the business. And hence it is probably extremely important just to kind of probably as a management team just step back and say once in a while, say okay, are we rightly structured, and keep thinking, because somehow when we start doing our budget planning, and all of us, at least I'm guilty of that, we just say okay, where are we today, then what needs to be done, what is changing for the next year, so many positions are needed, we are doing this XYZ, and hence kind of that's the budget for next year. It makes sense to probably step back once in a while and say okay, are we rightly structured, is this what are the opportunities not only to reduce headcount but also do something structurally. And I've seen that pays back, right, whether it is consolidating, optimization, multiple channels, or multiple regions, or multiple geographies, multiple teams, delayering the organization. If you have the right number of headcount, it's easier to pay them well, take care of people, maintain the culture, and not really scrounge for money. That's one philosophy that I've taken. Second part, which is diversity, I don't think it's investment or a cost. It's actually the benefit. I generally see that genuinely the productivity of the team goes up. You as a team become more empathic towards each other. The diversity of the ideas that come in the room are much better. So, and it doesn't really cost much. It just requires focus. It just requires commitment that you want to drive diversity in the team. You want to allow different views to come into the room, and that helps.
Thank you, Deepak.
Okay, so investment in people, time is up, okay. Unfortunately, I feel people are the only assets of business. Unfortunately, they don't come in the balance sheet. That's the difference. So, you can't do anything without people. So I think investing in people is the last thing that one should question as to whether it is desirable or otherwise. And so I think that's very well acknowledged, and in most companies, including startups, HR becomes the most important and indispensable function in any organization now. And more than HR, I think each one of us as leaders have to, kind of own up our teams and be the HR for our teams. So in terms of investing in them, whether in terms of training, development, their balancing their work life, so to say, by helping them with, a lot of things changed when COVID happened and work from home happened, and then people realized that, there are benefits of allowing people to have flexi time. So there are lots of these small things. Having creche at the workplace helps women, be at ease when they are at work, right? So a lot of these small things which may not really cost you much, but these are really good in terms of improving employee engagement and ensuring diversity in workplace. In fact, my earlier organization, we used to, we had specific targets, not only in terms of gender, but in terms of LGBTQ and differently abled people. We used to look for and recruit people with different abilities to ensure that, we represent the nation in some way within the organization, and not be. But unfortunately, today in my workplace, in my MC, we don't have, we have all male members, because Raymond, the complete man, and therefore it's always been male dominated. But we have very, very good, lady members. I hope, our MC improves to add some more diversity to it. But I personally feel that it's extremely important to have DEI as one of your, core objectives in terms of managing the business.
I think it's an accepted fact that investments in your people is absolutely essential. But just on the new generation, so if you look at the younger crowd who is joining the organizations, let's say people who are in the age bracket of 22 to 26, 27, their expectations of the workplace are completely different. They want to know, is it going to be a fun place or not? Now, amazing. In our times, we never thought like that. We just thought that, well, if you get a good salary, you'll get increments every year, we'll have promotions. That's good enough, okay? And we are happy with this. Nowadays, this generation, their first requirement is the place going to be fun or not? I mean, very difficult. Sometimes we find it difficult to reconcile. You say that what is there going to be fun in it? You are going to come to office anyway. But that's the reality. And if you have to attract the best talent, you have to attract new ideas, you have to attract the technologically quicker guys, okay, and admittedly younger generation is technologically also better, then you don't have a choice. You have to invest in your people development and more on your culture change. Tanushri, what you mentioned was not just investment in your people, but also investment in changing your culture. It's easier said than done because culture starts at the top. It really doesn't come in a bottoms-up approach. It has to start from the top. And many a times we have promoters, entrepreneurs who are quick enough to realize this. They understand that there is no option. You have to change the culture from the old mindset of task orientation. So you are only focused on task, get the work done very quickly with the least cost and the highest efficiency. But now you need to make the work also as a, what they call that, a GPTW, great place to work. So I think that's where the investment is really needed in people development and in culture.
Excellent point, Percy. I think investing to ensure that we can attract and retain the younger guys, and especially in boring industries like steel and chemicals, is absolutely essential, because otherwise we won't have sustainability. But I'm going to pause over here because we've been told time's up. And if there are any questions, very happy to take that. Otherwise, thank you for being such a gracious audience.